Good afternoon, everyone. Welcome to the Standard Chartered Bank Economic Outlook for 2018. If I can introduce Lamin. Lamin is a friend, a CEO, and it's my honor to introduce him to you today. Lamin is a deep thinker, and I follow so many people all over the world, and I remember when Donald Trump was a 1% chance for the US election. And everybody was discounting him. And Lamin was telling me, at that point, Lamin, we should have put money on it because we would have retired. And Lamin said to me, you're all misunderstanding the likelihood of this man becoming president. And this was at a time when no one was even thinking that he could make it. And Lamin has always shared that quality of information with me. Therefore, I have the highest regard for his thinking and the way he runs his organization. And you can see that in the preeminent position Standard Chartered has in this region, a very well-deserved position, and in the quality of the people and the human capital that he has with him. Lamin, Manjang, I'd like to give you the floor. Thank you.
All right, thank you very much, Ali Khan, for those very kind remarks. Can you all hear me? Okay, very good. The chair of the board, the members of the board that are present here, our chief economist for Africa and the Middle East, Razia, distinguished clients, my colleagues from the bank, ladies and gentlemen, good afternoon to you all. A very warm welcome to all of you to this economic briefing session with our chief economist for Africa and the Middle East, Razia Khan. Razia, I'm sure many of you have interacted with her in the past. I call her the star attraction of this event. The fact that we have a full house, I think, is testimony to the insights and the ability that she has to really connect with all of us. Of course, it will be moderated by Ali Khan Sachu, who of course needs no introduction, a very good friend of mine as well. I think it's great that we are having this session so early in the year. I met many of you and we were still saying Happy New Year, so it means it's still early, all right? It's fair to say that the previous year, 2017, has been one of the most challenging that we have faced, both globally as well as domestically. After all, 2017 was the first full year of the Donald Trump presidency. And it already feels like it's been 4 years, all right? It's been characterized by a sense of nationalism, put America first. We saw America pull out of the climate change agreement, pull out of the Trans-Pacific Partnership Agreement, reduce funding to global institutions, and of course the saber rattling in the Korean Peninsula, where we were comparing whose nuclear button was bigger than the other's nuclear button. So clearly the global environment has had its fair share of challenges. On the domestic front, we also had the intense electioneering period, lasting for the whole year, with many twists and turns. We had the full year of the interest rate capping regime. And of course, we had drought at the beginning of the year as well. So when you put all of these things together, it impacted the GDP growth, which slowed down from the historic 6-7% that Kenya used to enjoy to below 5%. Credit growth that used to be at around 20% year-on-year growth went below 2%. And of course, many banks reported a drop in profits. Some issued profit warnings. And of course, a number of investment projects were also delayed. People adopted a wait-and-see attitude to see how things will pan out. But now, as we enter 2018, I think happy days are here again. I think there's a general air of optimism. As I went around meeting my colleagues, meeting many of you, our clients, I think generally people are very positive about 2018. Globally, GDP growth is forecast to be above 3%. I saw a figure of 3.9%, which is very positive. And Kenya's GDP growth, we expect it to rebound. Obviously, Razia will share with us her own forecast of where she thinks that will land. But it's going to be anywhere between 5 to 6% in terms of 2018. But what brought out the sense of optimism really for me was an event that happened right at the beginning of this year, very early in January. And it's a company called Squire Pharmaceuticals. It's the largest pharmaceutical manufacturing company in Bangladesh, and they decided to make their first foreign direct investment outside Bangladesh and into Africa. So clearly, they had several countries to look at. They looked at markets like Ethiopia, markets like Tanzania, but finally they settled on Kenya. And the CEO and his team were here for the groundbreaking ceremony of that multi-million dollar factory. It's going to be a $75 million investment. It is going to be a state-of-the-art pharmaceutical manufacturing facility right here in Kenya. It's located at the EPZ, at Athi River. Now, this was, for me, a massive vote of confidence in terms of the outlook for Kenya. When the CEO was asked, why did you choose Kenya? I mean, after all, we had just come out of an election period. But his answer was very telling. He said there were two aspects. One was a very positive, supportive policy environment for foreign investment in Kenya. And the second was the quality of the people in Kenya. So I think when they benchmark against other markets that are perhaps bigger in terms of size and so on, those two qualities came out. The policy, the supportive policy environment, and of course the quality of the people that we have. And for me, the fact that that particular investment also reinforced two of the big four initiatives that President Kenyatta announced. Remember, it's manufacturing and it's in the healthcare sector. Of course, not everything is bright and optimistic. I think on the global front, the increase in the price of oil, that obviously is going to be a challenge for oil importing countries such as Kenya. We still have the geopolitical risks, of course, the Korean Peninsula, the Middle East. Some of these could crystallize, and of course, they would have an impact. The run-up to Brexit. It's now March 2019 when Britain formally exits the European Union. So for a market like Kenya that has large trading links with the UK, obviously that's going to be a challenge. In fact, earlier last week, I was part of a forum organized by the British Chamber of Commerce on Brexit and what does it mean for Kenyan exporters. I think the fact that the interest rate capping regime is still there, that's going to have an impact on credit growth as well. I think banks have adjusted, but still, the reality is that with a capped regime, credit flow to the real sectors of the economy will be impacted. So instead, what you have is banks putting money in treasury bills and treasury bonds, which it's okay, but in terms of the wider picture, I think we would rather lend to the real sectors of the economy than have the government crowding out private sector investment. And of course, the fiscal deficit. Again, I'm sure Razia will have a chance to talk about that. But the fact is that government is spending more than it is collecting. And of course, that is widening. And with that, I think there will be the need for fiscal consolidation at some point in time. There are also worries about the size of the government debt, which at around 54, 56%, still sustainable. But I think concerns about how rapidly we got into that level of debt to GDP, and of course the burden that it will place on government when it comes to debt servicing and so on. So these are some of the challenges that are there. But I think overall, as I said, the threats are there, the challenges are there, but the air of optimism that the fundamentals would still augur for better growth in 2018 and beyond. Now, at Standard Chartered, we have continued to focus on you, our clients, to enhance our value proposition to you. We have increased our level of engagement so that we can build deeper relationships where we can listen to you and respond to your needs in a proactive manner. In fact, I met one of our clients just now at the lunch, and he was just emphasizing this point, that the level of engagement that we have been having, I think, has really increased over time. And I think that's really what banking is all about at the end of the day. It's about relationships. It's about building those deep relationships with all of you. We've also continued to invest in our digital capabilities so that we can provide you with speed, with convenience, and personalization of your banking experience. We launched a mobile banking app. Many of you who are personal clients of ours, of course, have got the app, the SC Mobile, which has really transformed the customer experience. Our online banking, our straight-to-bank platform, these are still leading in the market. And recently, we launched electronic cash deposit machines. Now, what we have done with this is that, apart from the ones that are in our branches, but we can actually deploy this at your premises. And it means you can deposit cash using those machines, and it gets reflected into your account instantly, real time. So these are all some of the initiatives. We've also launched video banking. For some of you, I don't know who have experienced that. It's the first in the market where wherever you are, you can actually have a video interaction with your bank. Now, the aim of all of these investments is really to make banking easier and more convenient for you and to give us an opportunity to meet your evolving needs. We have a unique structure at Standard Chartered where we are able to tap into the strengths of our global network, coupled with the deep knowledge and the understanding that we have of the local markets that we operate in. Our local board of directors play a very, very critical role in terms of sound governance and ensuring that we get the guidance for the management team.